Tim, what's up, man? Happy Friday. Hope you guys are doing well. We are back at it with another one of these little, we got to come up with a name for these. But basically, me interviewing Jordan, chatting about trading, strategy, all sorts of cool stuff. And after last night, right, I thought last night's live was so good, right? Where we interviewed Hutch, talked to him about his trading strategy, talking about how he's doing in the markets, his journey. I thought it would be a really good idea to do a similar one, but for Jordan. Similar to Hutch, Jordan's got a pretty unreal trading story. I sent out an invite to a few different groups. So hopefully we get a few people in here who are, from outside of Predicting Alpha, who can ask questions and hopefully learn a lot from you, Jordan.
Cool.
Yeah,
it's very cool. Happy Friday, guys.
It's been a while since you've told this story, eh? Since you've talked about your come up, since we talked strategy. It's been a minute.
Yeah, definitely. I think, building a profitable trading strategy is not easy work. You know what I mean? It's definitely a lot of hard work, and I'd like to for sure chat about how to build a strategy, basically how to build a business.
That's a really good way to look at it, right? Your trading is your own business. And, the number one, a question that I started to ask myself, and I ask other traders when they're asking me questions about their strategy, is if there was somebody else doing exactly what you do and not charging a fee, would you give them your money to manage? And almost 100% of the time, the answer is no. And then I say, but you're already doing that because you're giving your money to yourself to manage. Right? What do you think about that, Jordan?
Yeah, I think that's true. I think I think that's 100% true. If you're managing your own money, you gotta perform well. Otherwise, just give it to someone else to manage for you, right? Who's putting in the work, putting in the time, who's understanding the game. There's a whole industry out there for that.
So you know what? I think you said a couple things there that I really liked, right? You said, putting in the work, putting in the time, but you also said understanding the game. And I think those are two very separate things that are equally as important because, a lot of people put in the time, right? I've talked to so many traders who they're at work, spending their life on trading, right? Not excelling in other areas, maybe even giving up other things for that, but not necessarily turning the corner. And why do you think that is? Why is it that somebody can put in the work and or put in effort and time and not necessarily turn the corner?
Yeah, I think there's two things to that. One side is there's a lot of luck involved. Like I think we were having this conversation the other day, Sean. Someone is playing in the NBA or is playing in March Madness. They have amazing talent, and they go for a jump and they break their leg, right? And that guy put in the work, he put in the time, and it was unfortunate that he wasn't able to make it to the top, right? And I think in trading, in anything that's competitive, there's always going to be those, a lot of people are just going to fall off for multiple reasons, right? That are unlucky or, just slightly went down the wrong path. But then the other side to that is a lot of the times, a lot of people aren't learning the right things. Right. And so they stay in, let's say the house league teams and the high school teams because they were never really learning from, let's say, the best coaches or had the best teammates to push them forward. I think those are some of the big reasons why people never turn the corner. The coaching, obviously the raw talent, the ability, even though I think trading can be taught. And just a team to keep pushing you and giving you ideas.
I feel like it was about 5 years ago, though, where you had a real paradigm shift in the way you viewed the markets. Right? You want to talk about that paradigm shift? Because I think this is learning the right things, learning from the right people. It all comes from asking the right questions and looking at things the right way. And not everyone's looking at things the right way, I feel like. Or there's a big difference between what the winner's circle is, the lens the winner's circle is viewing things through versus everyone else, really. And do you want to talk about that transition for you, how you sort of came to that realization and what that even looked like, what I'm even cryptically talking about here?
Yeah, I think it's actually also putting yourself in a certain situation. I think that's actually a really big one. So, just quick example. Um, I put myself in a situation where I was trying to like do a trading exam or an investment exam. In Canada, it's called the CSC. So I put myself in a situation to do that, and so I was downtown. I was in like the finance industry, and then I ran into your uncle, let's say, and seeing him there, and then approaching him and saying, I knew he was in the business. Can you give me some pointers? Um, putting myself in a situation like that, I feel like those are the things that really get the paradigm shift. Even if you're uncomfortable going in that situation, right? Like I knew he was a big trader, and it may be a little bit intimidating. But I think putting yourself, like, maybe going outside your comfort zone and putting yourself in a situation where you might not be comfortable, similar to the guys at PA, right? We throw them in the fire, right? And a lot of the guys, they say, this, or not a lot of them. A lot of people that come into PA are pretty excited about it, but some of them say this is too much for me, and then they back out, right? But then there are some that like get burned in the fire, and they come out the other side. I guess a little more ugly, but a lot better trader.
And
So, yeah.
I want to build on that for a second, because I remember you telling me when you ran into him,
Mm-hmm.
you weren't very happy with the outcome of that conversation, right?
Right.
And I think that there's a big thing there where, as traders, we're obviously betting that we're right. And when we're told we're wrong or we're shown contrary views, it's sometimes tough to take. So you want to talk about dealing with opposing views, when to know who to listen to, when to know who to not listen to, how do you make that distinction? And how do you sometimes, how was it, because obviously you changed the way you were trading. You kind of had to humble yourself at some point. How was experiencing that, and how'd you do it?
Yeah, I mean, as a trader, you're kind of betting against everyone else, right? You're kind of thinking your ideas are the best, and so I think that's part of being a trader, right? Is having a little bit of ego, but at the same time, you gotta know when to listen to someone, right? When should I be listening to this person? And a lot of the times, that's really hard. And I honestly think that I tell the guys in the group sometimes that I think that's 70% of the battle. Right, 70% of the battle is building the connections, knowing who to listen to, knowing who to talk to, and once you have that, onto that circle, right? Things get a lot easier. It's still hard, but they get a lot easier. So I think the best way to really understand who to listen to and who to talk to is start from people who are verified, right? Aaron Brown, Yoon Sinclair, start there. Augustin LeBron, start at the top. Okay. And then when you start listening to how these guys are talking, right? David Aronson, when you start listening to them, and then you start to say, well, this guy kind of talks like him, and this guy kind of talks like him. And then you reach out to them, right? And you start to, really train your mind to who should I be listening to, and, who should I not be listening to? I think that's probably one of the most important things in this business.
So obviously that shaped the way you think about trading, right?
Mm-hmm.
And, what would you say is the way you view the markets? How do you look at finance?
Yeah, just trying to find value. Just trying to find something that's mispriced. That's usually my bread and butter, right? Trying to find something that's mispriced. It's easier said than done, but there's other ways to do it as well, right? There's like risk premiums. Yeah. So there's really like two types of trading, right? In my opinion, there's risk premium trades, where you are, collecting some type of risk premium, buying equities, right? Buying equities, you're collecting a risk premium. And then there is, or selling volatility. And then there's other types of trades, which are like inefficiencies. So an inefficiency would be the options market is not pricing in the dividend of a stock. That's an inefficiency. And like usually those inefficiencies aren't there, but they are there at the same time, right? They're not there all the time. They're hard to take advantage of, but they're there. And so those two ways of trading are really the way that I look at it. Can I find overpriced risk premium or underpriced risk premium? That's the first thing. The second thing is is there type of some inefficiency here? It can, in quantitative finance, we usually provide liquidity somewhere else. We transfer liquidity, right? We take liquidity from this and we put it into this. Let's say selling vol on S&P 500, buying vol on Apple. Both liquid, but you guys get the point. So that's really what we're doing, right? And that's really the way that I view trading.
I'm not gonna lie, Jordan. You're sounding like a real boomer here. It sounds like boomer trading. Like you sound like you're at Goldman or something.
Look at the trading floor, man. Look at my trading floor here. I'm right in the office at Goldman.
What about like why not price action? Why not?
Oh, dude, I feel like that's real boomer. I feel like price action is like old farts, man. Okay,
why,
yeah.
Why? Like, what are you making? 10% a year doing what you're doing? This is so boring.
Yeah, that's a really good point.
Like, I'm not trying. I'm not a math guy. I'm a quant. Why would I ever even consider what you're talking about here?
Yeah, I feel like it's the way to make money. It's the way that every single person I've seen that makes money. You buy undervalued things, right? And you sell overvalued things. And the way you view value, a lot of people say value, buying low price earning stock, like that's not what I'm talking about in value. Like there's so many ways to view value, right? Buying an underpriced house, buying an underpriced vol. Well, underpriced vol is an underpriced, an option.
$5 bill for $3.
Yeah, that's really the name of the game. And this price action stuff,
have you done
easy. Oh yeah. I did my equivalent to CMT in Canada, man, a couple of years back. A charting market technician, certified market technician.
So you're a certified market technician.
I'm an old fart. I'm an old fart.
Chart Picasso.
Yeah.
Okay.
Yeah, the reason a lot of time the reason why it doesn't work is so subjective, right? But it's easy. It's such an easy barrier to entry. There's no barrier to entry for reading charts. It's just such an easy. It's so easy to get involved. It's easy to understand. As humans, we see patterns all the time. We see something, we try to tell a story about it. And that's I think that's why it's there, or why people come into it and do it.
But why aren't you doing it? Like, couldn't you just be better than the next guy at it?
So, okay, I will say in trading a lot of time, you should be better than the next guy. So there's no need to reinvent the wheel, right? You can just get better at something than the next guy. So for example, let's say the highest frequency trader is trading at 1 nanosecond. Well, if you can come in at a half a nanosecond, you're going to make all the money, right? So in trading, there's this little thing, and it's just, I'm sure you guys have heard it multiple times. Don't reinvent the wheel. But what that really means is just do it a little bit better than the current guy who's doing good. That's all it means. And that's my philosophy in trading. I think is that's a big pillar in it. It's just do it a little bit better, right? If I'm pricing an RND, if I'm pricing, the risk neutral density of an option, I should do a little bit better than the other guy. If I'm trying to price forward vol, I just got to do a little bit better than the guy who's doing pretty good right now, and you're gonna make the money.
So, yeah, we gotta slow it down for 1 second here, because these are, a lot of people are gonna be like, "What are you talking about?"
Mm-hmm.
Like, okay, like it sounds cool, but it's also gibberish,
mm-hmm.
right?
Okay.
Mm-hmm. Why aren't we doing price action? Like, what's the answer?
There's no money. It's too subjective.
Okay.
Like maybe there's some savant out there who can see the signal in the noise with his eyes. Maybe there is, but to think that even 99% of people are going to be able to, or even 1% of people are going to be able to do it, I think is ludicrous.
Why? Why is it like what have you learned that makes it ludicrous? Because I see the patterns. I see I see it. I've made money doing it. Let's say,
right? Just throw up a price chart.
I've done it. Convince me, or tell me what will need to happen for me to be convinced that Like, what should I have an eye out for to say, is this working or not?
Well, your P&L, your P&L is one, right? Outperformance over the S&P, beta to the S&P, right? If you're doing the same return as the S&P, doing technical analysis on equities, you're not really providing any value there. So I would say, yeah, of course, P&L. If like one thing that always mind boggles me, and I was like this as well. I was like this as well. And I look back at it and I say, I can't believe I was like that. But I would look at my P&L statement and I'd be losing a ton of money doing chart action, doing price action. I'd be losing a ton of money. And then I go online and banter to people and be like, you don't know anything about trading, right? You like, what do you mean price action sucks, right? And meanwhile, I have my brokerage statement. I'm losing a ton of money. So I think at the end of the day, your P&L statement is going to tell you, like, are you doing good? Are you doing bad? Just like any business, right? If you have this idea and you come out to the market and you start, trying to, you're trying to provide your product and no one's buying it, right? Something's got to change. Something's wrong. And, the people that are able to make that paradigm shift are the ones that, are the ones that build on their business. Just look at, breaking alpha, right? We built a terminal, originally, when we originally built the terminal, we said, you know what? Some people aren't using this because of certain features. And so we had to come around and change that. Right. And we kept adding on it and building until finally, we're getting some traction. And so I think that's exactly the same thing in trading.
So I totally agree with you. Your P&L says it's the storybook, right? It tells you what's, is all the effort worth it? But there's a few new that I think keep people in the loop, keep people in the trader's rat race. For example, you're always getting better, right? Aren't you always getting better? I learned from those mistakes. Sure, I blew up, but I learned from that. I blew up 10 accounts, but this account I'm profitable on. There's a whole bunch of different little ways that yesterday's P&L maybe isn't really indicative of tomorrow's P&L.
Mm-hmm.
Or yesterday's P&L is good, but the last 10 years or last year's P&L is maybe not amazing. But I'm clearly on the right track now, seeing as yesterday's P&L was good, right? So beyond just the P&L, like, how can I tell if I'm on the right track? No one's here trying to lose money, but, you and Sinclair said it on Instagram or on Twitter the other day. He said there needs to be enough winning, losing strategy trades to keep people coming back to the market. If you came into the market and you just lost 100% of the time, you'd stop.
Mm-hmm.
Right. So there needs to be, like when you're at a casino, if you never won at the roulette table, you wouldn't play roulette. So how do you know if you're playing roulette or if you're running a business? How can you tell the difference?
How do you tell it? Oh, okay. So there's lots of there's lots of ways. So first off, it's really hard to ever know if you have a positive expectancy, right? That being said, there are times where you for sure, right? Like if it's a quasi-arb or an arbitrage. But even then, sometimes you can get picked off. In trading, what we would usually do is we'd say, okay, well, here we let's say look at our trading sample over, let's say, 2 years of trading. Or in back tests, we'd go back longer, right? And we'd cut it up into pieces and say, okay, what did our returns look like here? What did our returns look like here and here and here and here? And then we start trading. And then we say, well, what are our returns looking like now? And if it's totally different than what we saw in the past year, it's probably not working anymore, or there's something that went wrong. So that's one way to tell, if you have an edge, going back doing or if it's still working. But it's usually very difficult to tell if you have an edge. Like an example, so we try to look at value, right? Is this thing cheap or expensive? And if Sean gave me a $5 bill and said, hey, I'll give it to you for $3, I'd say sure, right? But sometimes we got to question ourselves, why the hell would Sean want to give me a $5 bill for $3? Right? So that's the other thing that comes into play. It's like, why is this happening? Right? And when you can understand maybe why it's happening or try to understand why it's happening, you might have a good strategy there. That being said, there's a lot of noise in the market, lots of noise. So edges are usually very small, and they're hard to really because the edge is really small. It's really hard to just like visually see it. You got to really like be rigorous about the numbers.
Mm-hmm. So let's say I'm coming into the market and I want to build a strategy. What options do I have? Let's talk about, obviously there's, I agree with you. There's two types of trading. There's risk premia trading.
Mm-hmm.
There's inefficiency trading, right? So let's, if you wanted to build a strategy around capturing risk premiums, maybe let's start there. What would you do? How would you build that? And maybe start with just a definition of what risk premium is.
Yeah, risk premium is the compensation you get for holding risk. Usually that means a concave P&L, meaning if things stay the same, you're going to make money. If things blow out, you're going to lose money. So for example, buying a house and renting it, right? You bought the house, and sorry, I just got a message there. You bought a house, and now you're going to rent it out to a tenant, but this tenant could go and totally destroy your house. Right now you're out of pocket. But if, let's say, he's a good tenant or she's a good tenant and she does what she's supposed to do, then you're going to collect that those monthly cash flows. So that is the risk premium, the premium that you hold for bearing risk, and the compensation you get for it. That being said, you don't always get compensated for it, right? And there are drawdowns. For example, holding equities has a risk premium simply because people can't withstand a 50% drawdown, right? Or 60%, like in the financial crisis. And so for that reason, not everyone's going to buy equities, or they're going to buy equities and do certain things to their equity to kind of suppress that volatility. Buy a put, sell a call. And so if you just hold that equity, well, you're going to collect that risk premium 9% a year. And then there are other you can improve upon that as well, right? You can maybe add some filters and say, okay, well, I've realized that value stocks have the highest risk premium relative to the risk. Okay, the highest return relative to my risk. And so now you start buying value stocks to improve or maybe capture a more expensive risk premium. So that's the way that I would build it, is basically looking at a whole bunch of data and saying, where is the risk premium most overpriced?
So, just because you mentioned you get your hands on a whole bunch of data there, and it actually is that Hutch said last night when I think you asked Hutch or I asked Hutch, where would you start again, right? What would you say to yourself a year or two ago? And the first thing he said was, get your hands on good data. Right? So I'm noticing this trend here of data, but I'm not a data scientist, right? I'm not really a coder. I don't really work with data. Why am I hearing this? Why should I care? Why are people saying this is important? I have my charts. Why should I care?
Yeah, it's a barrier to entry, right? At the end of the day, if you want to be, let's say, the fastest runner, you can't be eating McDonald's on a daily basis. You got to go, you can't be, let's say, working 9 to 5, right? You got to be on the track running all the time. You got to be doing all the things that are important for becoming the fastest racer. And that's like anything competitive, right? It's the same with insurance companies. Why don't insurance companies just draw lines on their P&L graph, right? Well, they have a whole, they got a whole section of people looking at the data, trying to price these risk premiums, right? Sean's a 25-year-old man, not smoking, and goes for runs all the time. Given the data we have, this is how much, we did a whole bunch of analysis on the data. This is how much we should price Sean for Sean's risk premium. And the person who can so in the insurance business, right? The person who could, let's say, get a better model and price you better, Sean, well, they're going to get the business, right? If let's say Sun Life is charging $100 a month because of their models for you, and I come in and I say, Sean, I'm Manulife, and I come in and I say I can give it to you for $80 a month because my model's better than Sun Life's. Well, I'm going to get your business, right? And that's the same thing in trading. The better you are, the more skills you have, finding out where you fit into the market, you're going to be able to make more money. It's that simple. And of course, really understanding the business and how things work and a little bit of microstructure, that's really going to put you in a winning position.
How confident are you that you're going to make money into the future?
So that's the thing that I deal with all the time. I battle with personally all the time. It's like, what if my edge dries up, right? What if my edge goes away? And that's a real risk. That's a real thing. It's a real thing as an entrepreneur, right? Let's look at PA. How do we know that a competitor doesn't come up tomorrow, right? But I don't think we can live like that. I don't think we can live, just always worried about competition or edges drying up. We need to focus on the current edge we have, hit it as hard as we can, keep learning, keep being curious, and then when that dries up, you hit the new one. You try to build the new one as quickly as possible.
Well, how confident are you that you'd go? Edges do dry up, right? It's the game, right? Things that worked yesterday don't necessarily work today. Things that work today won't necessarily work tomorrow, and things that didn't work today might work tomorrow.
Mm-hmm.
Right? So it's part of the game. I guess to maybe clarify my question is, how confident are you that you could find a new edge? If you are, why? If you are, why if you're not?
Yeah, I would say, as a trader, I'd say I would be able to find a new edge. That being said, it will take a lot of work, right? No good strategy.
I'm trying to dig into because the reason I ask is a lot of people would love to trade full time, but you accept the fact that edges come and go. It's not like you can buy someone's simple 1, 2, 3 strategy and all of a sudden you're set for life and you're going to live the laptop life, blah, 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 blah. It's like things change. This is a constantly evolving market, and you need to be the guy who can go find an edge, right? And you've found edges, right? And obviously, you haven't been doing this for 25 years yet, but you said, you think you could find one. Why do you think you could find one?
I think I could find one simply because my connections, my ability to pull data, transform data, be able to do some statistical modeling, really understanding the business, the microstructure. Now, that being said, by all means, as you said, I'm not a 25-year-old veteran in this game, and I still have so much to learn, right? So much to learn. But I think having the right connections, when I have a question, when I need to learn something, I'll be able to get answers. And that, coupled with my curiosity and ability to change on a dime, like if I need to learn something, I'll learn it, right? If I need to go learn some kernel regression, I'm going to go learn it, even if I don't know it currently. And getting outside my comfort zone, I think is totally okay with me.
Can you share a story of a time when you had to do that?
Yeah, for sure. So in high school, you know what? To be honest, I was always all right at math. I was okay at math, but I kind of like fell off in high school because the girls and the girls and the drinking and the smoking, all the bad crimes, right? So I kind of fell off, skipping class, whatever, and I had to get some math tutors. Did advanced calculus twice. Did advanced functions twice. Did calculus in night school. Did advanced calculus, advanced functions 3 times. I did one in summer school. Bombed it in during the regular school because I was always at the gym with that we had like a gym class. But anyways, really messed it up. So I was pretty far behind. I probably had like maybe a grade 10 education in math, to be honest. And so, I was doing all these chart readings and stuff. You know the story. Went off to Portugal, blah blah blah. Trying to do all this chart reading stuff, and um, afterwards I realized, like, holy smokes, I need to know the math. I need to learn the math. Like, this isn't good. And so I basically had to, I rolled in school, and I had to get back into the flow. Right. I had to. I remember I went to Chapters, our local bookstore, picked up a calculus for dummies, like all the practice questions, and I literally sat there for hours and hours and hours, just like doing all those practice questions. Um, Even though I didn't want to do it, right? Even though I didn't want to do it, I kept telling myself, like, I need to do this. Learning coding, right? I was never, you know, an advanced coder, or really into the computer science or anything like that. But I said, hey, you know what? Uh, I need to be able to do a back test, right? That was one of the first things I wanted to do. I need to be able to do a back test. I can't be there staring at a chart all day, drawing lines and pretending I'm doing back tests. I need to seriously get a back test going. And so I said, okay, I got to learn some programming, and just keep transforming. You just gotta, as new things come up, new technology gets built, you got to learn it. You got to be there at the forefront of the game, because if you're not there, someone else is, and they will get the deals.
Very cool. All right, guys, so we're getting here at 11, just around 11 a.m. We try to keep these to a half hour. Jordan, any final words you want to share, just given what we've talked about on this live today?
I'd say just, I guess, for what? For being making some money?
Somebody sitting here right now asking questions about, man, like, I want to win, but like, this is, it's tough.
Yeah. So I think you got to really ask yourself, like, what do you want? Right. So a lot of people, let's say, want the freedom. They want the freedom. Well, that is not trading. Okay. That's not getting the freedom. You don't have to trade to get the freedom. So you got to really ask yourself, like, what do you want? Right. If you want to make the most money possible because you love the game of trading, you love understanding, expected value, and you love, beating people and being competitive, and you just want to make the most money humanly possible, right? Well, maybe then trading's for you, right? Because, I'm not saying, trading is not the best business to get into in terms of money, but the sole purpose of trading is, how can I make the most money as fast as possible, right? That's the whole business with trading. And to get there, you got to be able to actually beat the people who are also trying to get there. It's not a test, right? There's not like, you're good at chart reading, you're good at math, so here's your $1 million a year, right? It's everyone else is good at math, I got to be better. And that's really the nature of the game. So, I would say sit back and ask yourself, like, what do you really want? And then see if trading fits in there. Right? There's so many better avenues to make money if you don't love trading. Right? Just look at what Sean and I are doing in terms of predicting alpha. Right? This is this is a business on software and community. Right? That's what this business is built on. And it doesn't have to be exactly tied to trading, right? There's a lot of people that make a lot of money in so many different fields. But there is a business of trading, and it's just like any other business. So just see if that fits into what you want in life. That's what I would say.
Jeez.
What do you think?
I think it's good. I think it's the reality, right?
There's a reality.
A million other people on YouTube who will tell you about how they made a bunch of money in 1 second, and you can too with this one simple trick. There's a million people who will tell you that, but guys and girls don't come to Predicting Alpha to live in an echo chamber. They come here to be challenged, and that's what we want to portray on the outside and inside, because it's the truth, right? There's no free money. And even in other businesses, there's no free money. And if you don't love it, you're not going to be the guy who gets that money anyways. So I definitely agree with it. I think it's something to definitely think about, guys. Happy weekend. Enjoy your Friday,
Woo!
Let's go
Get
learn
those
some
drinks going.
No, but it's the truth. So Jordan, that's really good stuff. So everyone, we're going to wrap up the stream there. Oh yeah, analysts, free trial program. We are going to be launching that very, very soon, probably within the next week or two. I think I say that every time, but yeah, no, I definitely I have you on the list. If you sent me an email, I have you on the list, and that will be you will get an email with a link to sign up when it's ready. But I appreciate you checking up. I should probably send out a little blast saying it's coming soon. So guys, if you're new, then just make sure to drop a subscribe. Please leave a like on the video. It means a lot. And Jordan will be back with us next Friday. And besides that, we will be I'll be back at it Monday morning, breaking down trades live. By the way, guys, I did take that discovery trade. So let me know if any of you guys are along for the ride. It could be fun. All right, Jordan, thanks a lot.
Okay, no problem. See you guys.